Well, thank you very much for joining us today. I'm Marlon Bowling with you, and we are watching your ag commodity trade. We're watching your grain and livestock markets, and we had a little bit of a rebound here in the grain trade last time we checked. Let's take a look at our prices in Chicago, right at the CME Group. Let's go there right now and look at that corn market. And on the corn futures right now, we started out about 2 lower on the day, and right now you have your December contract back to unchanged. So it did kind of claw its way back. And if you're watching at home, you will note that it is, well, it just touched the high of the day. It's now 1/4 cent lower, but it's very close to back where it finished yesterday. So it's a very similar trading pattern to what we had yesterday when we started out weak and then firmed up. July corn right now would be down 1/2 cent. We're trading at $3.72 per bushel. As we move on to that soybean trade, let's take a look over at the soybeans. And we did have news this morning that USDA said we sold 130,000 tons of soybeans. It went to China for the current marketing year, and that was all in one batch. So you would think that would be helpful to the soybeans on the surface. If you look at the futures, though, that is not the case. We are still a little bit weaker today. And right now, the soybeans on January would be down 3 cents, trading at $9.87 per bushel, and we have July down 3 1/4 at $10.16. Wheat trade real quickly here in Chicago. We have the December contract 5 1/2 higher at $4.27 1/2 per bushel, so a big rebound there. We are over 7 cents off our earlier low this morning. Kansas City, real similar action. December now 5 1/2 higher at $4.21 1/2. And in Minneapolis wheat, we have December now trading 1 1/2 higher at $6.27 3/4. Cotton trade today. Here's a look at December. Big rebound, but it has come off its highs. We're now 58 points higher at $71.95. Brian Hoops joins us right now, the president of Midwest Market Solutions. He is based in Springfield, Missouri. And there he is right now. How you doing, Brian?
Hey, I'm good. Good to talk with you, Marlon.
You too. So have you been able to tell what's been driving this little rally that we've seen at midday here in the grain trade today?
Well, you know, one thing is since the overnight trade, the U.S. dollar has weakened quite a bit, and that's really pumped up the wheat values. You know, fundamentally, wheat is supported by dry weather in the plains. We saw crop condition ratings out yesterday, and those ratings dropped quite a bit in Kansas, Texas, Oklahoma, the key winter wheat producing states, and that's a supportive feature, especially for Kansas City. But U.S. dollar falling has really the thing that has really supported the wheat futures, corn and soybeans not pulling back much off of their highs as well, kind of similar to yesterday where they were lower in the overnight, then found some buying interest during the day, and certainly a stock market breaking out and making new highs along with crude oil, which has been higher most of the morning, is a supportive feature as well.
Yeah, the crude oil that you brought up, we can take a look at the prices. Folks may be wondering about locking in some diesel fuel prices before the end of the year here. On the crude oil trade today, we did firm up a little bit. Right now, we're up 38 cents at $56.80. This is on West Texas Intermediate crude that we're looking at. The January contract now only 38 higher. It's come off its high of 57.22. Back on the grain side of things, I guess attention now after the November crop reports have kind of run their course. I guess attention is going to be, I guess, on Brazil and Argentina, looking at growing conditions, right?
Yeah, the main thing right now is lack of farmers selling here in the United States and growing conditions down in South America. They had good rains over the weekend in Brazil. There's more on the way, another 1 to even 5 inches in some local areas. So Brazil's going to get drenched with some rains this week, but it's Argentina and southern Argentina that remains very dry. And those are the areas that trade is watching very closely, because if we do get some crop stress noted in corn and soybeans in southern Argentina, that should be positive for our prices, especially with funds holding big short positions in the corn market.
All right, Brian, we'll bring you back here in just a couple of moments, and we'll talk about the livestock trade today. A bit of a surprising market there. We'll come back with Brian Hoops right after this. We're back with you, and we're talking with Brian Hoops of Midwest Market Solutions in Springfield, Missouri. He joins us right now, and a bit of a bounce in that livestock trade today, at least on the cattle side here, Brian. Sold off yesterday after the cattle on feed report was bearish, but that was kind of expected last Friday. Placements numbered 110% of a year ago. Trade was looking for about 107.6, so a bit of a bearish surprise, but a lot of traders said, well, they kind of built that into the market. Now today we're seeing a little bit of a bounce here in the futures trade, so let's go ahead and pull up our live cattle market for you. Right now, December up half a dollar at 117.60 per hundredweight. We have February up 86 cents at 123.88. And on the feeder cattle side, we did have them over a dollar higher earlier today. They've kind of eased back a little bit, but still higher. January feeders up 73 at 150.28 per hundredweight. And March now 72 higher at 148.77. So let's stop there and talk about cattle for a little bit here, Brian. The cash market last week was admittedly several bucks weaker than what we had the week before. What do you expect to see here this week with the holiday?
Well, I do think we're going to see cash trade developing tomorrow. So there's been some trade kind of clean up over the weekend at about steady money with last week's trade in the north and in the south. We're going to see more trade, I think, tonight and into tomorrow ahead of the Thanksgiving holiday. We're going to get that cash trade wrapped up ahead of Thanksgiving, get it completed. It's probably going to be very close to steady money, I think, with the previous week. So you're looking at, lower from a couple weeks ago. Supplies are not getting any, tighter. There's really no reason for the packers having to pay up for the cash market right now. But, the future is certainly oversold, seeing a small bounce. Thanks in part to turnaround Tuesday. In addition, with the stock market being higher, that has encouraged some buying interest in the markets.
I want to get your opinion on the lean hog trade as we pull up the futures here. Let's take a look at the nearby December contract, which is down 32 cents at 61.70. And that's basically a full dollar off of our earlier high this morning. February lean hogs down 58 now at 67.90. There for a while, for a couple of days, it looked like maybe they had found a bottom and we're going to firm up off of that. Now what? Is this considered to be consolidation trade or what?
I think this market has found a bottom. It's trying to move into more of a sideways pattern, going to carve out a little trading range in here. We've been pretty much straight down the month of November. Now we go into the last week of November. I think you're going to see much more of a sideways pattern in this hog market developing. We have likely tested the top side of that resistance this morning. As you mentioned, we're a dollar off the highs and may go work towards the bottom end of that trading range yet today or into tomorrow ahead of the weekend. And certainly a lot of traders going to take Friday off, and so it's going to be very thin trade on Friday.
All right, now we had the box beef cutout values yesterday afternoon from USDA showing the choice cuts were down sharply. We had them down $1.06. The select cuts were up 20 cents a hundredweight though at 188.05. But if you look at the pork carcass cutout values yesterday, just to recap, everything higher, not like they were at midday, but they were still sharply higher. Carcass values were up $1.31. Bellies were up $2.34. Is that a trend you think they can continue here, Brian?
I think it's going to be tough here in the next several weeks. We're going to see a real tough pattern as far as this market trying to, work its way, any type of positive gains in the product markets or in the cash markets at all.
Brian, good stuff. Thanks for visiting with us today. Sure do appreciate that. Brian Hoops of Midwest Market Solutions in Springfield, Missouri, on top of everything and keeping us up to date.
All right. Thank you, Markets Editor Marlon Bowling.